Hi, and welcome to Elements in Focus. My name is Grant Soliven.
And I'm Aaron Rheaume.
You've got the Director of Financial Planning here with you, along with the Advisor and Manager Operations. And today in Elements in Focus, we want to cover tax planning specifically. And when on the show, we kind of go through all of our 5 critical elements. And remember, the reason we do this is because it takes a whole conglomerate, a whole kind of a process, operation, as you'll say, to keep your financial plan moving and functioning cleanly. And here in Elements in Focus, we want to break down our 5 critical elements and give you kind of bite-sized tidbits you can take home and work with in the plan and make sure your advisory team is engaging in these areas. Tax planning specifically, Social Security. And this is the kind of where we're going to spend our time today, and specifically Social Security taxation. Okay. And so, Aaron, Social Security is this, phenomenon that we get here where, you put in hours, you put in credits for working, get a paycheck. We don't know how that works. You can take it at 62, 70 for retirement age. But when it comes to taxation, we often find that individuals will make small mistakes when calculating it for taxation. A big benefit that most individuals aren't aware of is pay attention to your state tax code. Some states, like the state of Indiana, where we're recording the show, you don't pay income tax from the state of Indiana on Social Security. That's a big benefit, especially when it comes to having to write a check to the IRS for your state. And remember, Social Security taxation is maximum tax right now, at the time of this recording, 85%. And so, Aaron, if you kind of do us a huge favor, when we do tax planning, when we're trying to get conversions done for year end, it's that time of year again. Already, I can't even imagine it's middle of November now. When we're doing tax conversions and we're trying to help people understand how sometimes it makes Social Security more taxable, et cetera. What are we paying attention to with MAGI for the Medicare Part B premium? And why is it being 85% taxable? Why does that matter?
Well, it matters because you pay tax on it. It's just to be blunt, right?
Yeah.
And so we have to figure out when we're doing that, if we're going to pull a tax lever, how that works in a opposite fashion. And so if you, in your example, you mentioned Roth conversions. And again, in everything, or not everything, but most things that we talk about, it always comes back to the tax chart or the tax situation or the tax efficiency.
Correct.
So let's say you're a married couple and you've moved on into your life after work and living off from a pension, and it's meeting your standard of living, and Grant and Aaron get a hold of your financials and say, why aren't you doing Roth conversions? Because you have a big bucket of tax-deferred money over here that you're going to potentially have a tax situation down the road, right?
Right.
And so maybe your income for that year is under the amount that Social Security is going to be taxed. And there are income limits. I don't know those right off the top of the head. I have a handy-dandy chart in the office that gives me those numbers. So you can have up to, as you mentioned, 85% of your benefit taxed. So if Social Security is paying you $10,000 a year and your income is over a certain amount, up to 85% of that would be taxed. So $8,500 would go on your adjusted gross income, or not to add to your adjusted gross income. Where you have to pay attention to that is if you're doing Roth conversions, are you going to make Social Security something that's a limited tax to more tax? So if you're, let's say, in that 0% bracket, are you going to be pushed up into that 85% bracket to have that benefit taxed? You have to pay attention to those when you're doing anything from a conversion standpoint. The other misconception with Social Security, and I'm just going to go off on this topic while we're talking about it, is, when do you take that benefit? You mentioned earlier, you can take it at 62, you can take it at 66 in some months, 67, 70. Make sure if you're making a Social Security decision, you're making it an informed decision when you're doing that, because that can affect future dollars down the road.
100%.
Does that make sense?
It does. And Aaron, I love how you put it that way, because, we often get fearful quickly that Social Security is not going to be there for us when we take it.
Sure.
Now, sometimes it can lead to a $100,000 decision going against you. So I think what Aaron's trying to articulate is, when it comes to Social Security taxation, it's not just doing the calculation when you want to do things in retirement or beforehand. It's understanding when to take and how it affects your taxes, because remember, when Social Security hits your 1040, we can't go back and unwind it. So it limits our ability to do certain tax planning. And one final thing we want to leave you with is this. Most of us generally, when we get to your life after work and reach age 65, Medicare kicks in. Based on certain amounts of income that you earn, Medicare can actually, your Medicare Part B premiums and Part D premiums can elevate. They can increase for a 2-year period of time. And most people often forget, we see this more often than not, where individuals will come to our office for the first time and they come and they say, why we're doing Roth conversions like you stated, but our Medicare premiums keep skyrocketing. Well, it's because you have to pay attention to those thresholds, and they use MAGI. So oftentimes people forget that the full amount of Social Security, not just the 85% that's taxable, ends up harming them when they do the conversions because they didn't think about it ahead of time. So there's a lot to unpack here.
One last thing on that while you're on that topic.
Sure.
Is the income portion that they're looking at for Medicare is 2 years behind. So things that you're doing in 2020 would affect 2022's plan. Stuff that we help people with in 2021 is going to affect Medicare in 2023.
100%. Yeah. And that's a great clarification, Aaron. Thank you very much.
Sure.
I mean, we could spend hours on this topic alone when it comes to Social Security taxation, et cetera. There's far more in-depth material you can find on Consider This program. It's on all listed podcasts near you and also on the screen. You can also find our program on the radio on Saturday mornings and other times throughout the state. If you have questions regarding Social Security taxation or planning in general for year-end tax planning, please reach out to our team. You can find us at yourlifeafterwork.com, or you can reach us at 800-928-4001. We'd be so happy to see you, meet with you, talk through your plan. And if you continue to like what we're doing here at Elements in Focus, please sign up or tell those around you that you love to sign up for the program so they can get this on Tuesdays when it comes out. So thanks for being with us today. Sorry for a little bit of a longer show, but we'll see you soon. Thanks.